Hello everyone and welcome back to our channel. In today's video, we are going to talk about value investing, a popular investment strategy that has been used by many successful investors over the years. We'll go over what value investing is, how it works, and provide some real-life examples to help you better understand this strategy. What is value investing? Value investing is an investment strategy that involves buying undervalued stocks that are trading below their intrinsic value. The goal is to find stocks that the market has undervalued due to short-term issues or market volatility, but that have strong long-term fundamentals. By investing in these undervalued stocks, value investors hope to profit when the market eventually recognizes their true value and prices them accordingly. How does value investing work? Value investing is based on the principle that the stock market sometimes overreacts to short-term events, causing stock prices to fall below their intrinsic value. Value investors seek to take advantage of these situations by buying undervalued stocks and holding onto them until the market recognizes their true value. One famous example of a value investor is Warren Buffett, who has been successful in using this strategy for decades. His investment philosophy is to buy high-quality companies with strong fundamentals at a discount to their intrinsic value, and then hold onto them for the long term. Let's take a look at some real-life examples of value investing. First, Coca-Cola. Coca-Cola is a classic example of a value investment. In the 1980s, the company was facing short-term challenges such as changing consumer tastes and increased competition. However, Warren Buffett recognized that the company had strong long-term fundamentals and invested heavily in the stock. Today, Coca-Cola is one of the most valuable and recognizable brands in the world, and has provided excellent returns for long-term investors. Next we have Apple. In the late 1990s, Apple was struggling and its stock was trading at a significant discount to its intrinsic value. However, value investors recognized that the company had a loyal customer base and a strong brand, and began buying the stock at a discount. Today, Apple is one of the most valuable companies in the world, and has provided excellent returns for long-term investors. And finally, we have General Electric. In 2018, General Electric was facing significant challenges, including poor management decisions and declining revenues. However, value investors recognized that the company had a strong portfolio of businesses and assets, and began buying the stock at a discount. Since then, General Electric has rebounded and the stock has provided excellent returns for long-term investors. In summary, value investing is a popular investment strategy that involves buying undervalued stocks that are trading below their intrinsic value. By investing in these undervalued stocks, value investors hope to profit when the market eventually recognizes their true value and prices them accordingly. As with any investment strategy, it's important to conduct thorough research and seek professional advice before making any investment decisions. Thank you for watching and we'll see you in the next video.